So in this video, I'm going to break down the trades that I've taken over the last 2 weeks, and I'm also going to break down a few pairs that I'm looking at today. And I'm doing this just so you have an idea of how it is I actually trade. And obviously I'm not going to give away everything. I'm not going to give away my whole trading technique because it's taken me a very, very long time to make it and a lot of hard work's gone into it. But I'm still going to show a lot, so you should still be able to take away quite a lot from it. And I'm probably going to make this a weekly thing, but instead of doing it after I've taken the trades, I'll do it at the start of the week, so you'll see my analysis for the week, so you can follow along and take any trades for yourself. So yeah, let's jump into it. And we're going to start by looking at EURCAD. For all my pairs, I always start on the daily time frame, and I'm sure that a lot of people do, I'm sure that a lot of you do as well. As with the daily, you can just see the overall trend, the overall bigger picture, and you can just see a lot more, and that's how I always start. So with EURCAD, you can clearly see that price has been pushing down, then we've had a pullback, price has pushed down, we've had another pullback, and now price is pushed down, and I'm looking for a pullback to the Fibonacci level to continue its push down. So what I've done is I drew my Fibonacci level on at the top of the impulse here, to the bottom of the impulse here, and looking for it to hit one of those levels before it starts to retrace. And for anyone that doesn't know, a Fibonacci level is simply just a level where price is likely to pull back to before it continues in its trend. And for me, you won't see me have these plotted on my screen like this because it's super messy, and having it like that is just a pain, and you really want to keep your charts looking clean and simple because it's just the best way. So what I actually do, and how you'll see them on my screen, is I just get a trend line and I draw it across like that, and then I go to my template and I just have it as a sell or a buy for me. So that's exactly how I do it, just to keep it clean, just keep it simple. So that's how you'll see it on my screen. And also in that hour, because obviously the fibs are smaller, what I do is I just have a blue rectangle like this, because I can actually link two fib levels together and I know exactly where they are. And again, it just keeps my chart looking clean, so that's exactly why I do that. But now let's jump into the hour chart and dive into the entry. So after prices hit this daily fib, I was then looking for a chance to get involved in sells via the next pullback correction. So what happened was price pushed down, and then we started to create this free touch pattern here. And also the free touch pattern was to the fib levels, like you can see with my blue rectangle here. So once we got that third touch here, I was looking for entries. Now I could have taken it actually at the rejection, but I just missed that. And when I saw the push down, I was looking to get involved in a correction here, either a sideways or a pullback to a fib level. But what actually happened was I took the trade, let me just get it on. Should be this one, no, not this one. Once I saw the sideways correction, I just set the order on the break, and as you can see, I just got tagged in, and then I actually just got tagged out for a loss. But here's the important thing with this trade that I took, right? When I recorded this trade and I wrote down what I was doing with this trade, I wrote down everything. I write down exactly where I will look for my next entry on the trade. And this is important because yes, I lost this trade, not an issue. But I knew that if I lost this trade, I knew there was a chance that price could come back up, double top, hit the fib levels again, and then drop. And because I was prepared for that, I took the next trade as well. So as you can see, because I wasn't bothered about the fact that I lost, I wasn't emotionally invested, I wasn't throwing a tantrum that I lost and, you know, blaming the market. I wasn't bothered, and I was prepared to take my next trade. And because of that, I took the next trade up here because price just arced around, double top to the fib level, gave me a rejection, so I set the order. And as you can see, price just pushed down, and I believe it came to 7%, about 7.05, and I just locked in 5%. So I managed to gain 5% profit from that trade. Really simple, lovely trade. But if it wasn't for the fact that I was prepared and I wrote down to and told myself already that even if this trade loses, I know there could be another entry here, so I don't need to worry. That's how I was able to get involved in that trade. Whereas a lot of traders and myself, when I first started trading, once I lost this trade, you know, you just get pissed off, you're getting annoyed, you're not bothered about looking for the next trade, and then you see it come down, which is even more annoying because you knew that was going to happen, but you were just a couple hours too early, and you missed out on the whole move. But to avoid that, you just need to be prepared. You just need to be forecasting all the possible entries and not care about those one losses. So that's the trades that I took on this pair.
And now what I'm looking for is how price reacts to these fib levels here. Because now that prices broke the pattern, I plotted in the fib levels from this high to this low, and I'm just going to look and see what happens. Because what happens quite commonly is when price breaks a pattern, price can retrace quite sharply and it can come up quite impulsively like this, and then people just assume that it's a false breakout and that price is just gonna start pushing up. But what can happen, and this gets so many traders caught on the wrong side, is that price just hits one of these fib levels and then pushes down. It will just give you a correction to get an entry, and then it will push down even further. So that's what I'm going to look for. But I'm going to wait for that pullback first for some confirmation so that I can get involved. So that's another quick tip. Just look for that because it happens a lot, especially on the breaks of patterns. Okay, so just have a look for that, watch out for it and get involved, because you don't want to be getting caught on the wrong side of the market like everyone else. So that's that trade. Now we're going to move on to New Zealand yen. I actually got a few trades on this pair and it's quite a good pair to break down. So if we start on the daily, you can see that again. So you can see that price has started to push up, and then we've had a pullback. Price has just been pushing up, had a bit of a pullback here, but carried on pushing up. And all I've done is I plotted in my Fibonacci level from here to here, and I'm looking for price to pull back before it continues in its uptrend. Now, if I drop down to the hour, now you can see the price actually hit this fib level here, the first fib level, and now it started to push up. And once it started to push up, I was looking for a pullback, and this is my rectangle. This is actually the rectangle I was using before I decided to go to blue, because I just decided I like blue more, but whatever. So this is the fib level, and as you can see, price just come to the fib level and it created had 1, 2, 3 touches. So originally I was actually looking to take it on this double bottom here, but I actually missed that, and I ended up getting involved here. I ended up getting involved on this triple bottom on the fib level, and I just set the order after the rejection, and price just pushed up, and I believe we got to, let me just move all this out of the way, and I believe we got to 4.32%, and then I locked in 3% profit, and then price pulled back down to 3%. So it was a good trade, a nice 3% trade. However, the reason I locked in 3% profit there is because I started to see that price was starting to create another pattern that was showing me that price could go back down to the downside. So I had to switch my bias, not get emotionally invested in my buy, not get tunnel vision and just think I need to look for buys, I managed to switch up my bias and just take a step back and look what the market was showing me. So what I could see was that price had created this pattern here, where what happens is price just starts creating an angle like this. I just call them angle breaks. That's what they are to me. I don't know if they have any other name, but to me, I call them angle breaks. So price is just starting to create this angle. And what often happens is price will break the last double top, and then it will start to impulse down. So once I started to see that we broke this double top, and then price started to push down like this, and we just got this sideways correction, I knew that there was a very good chance that instead we were going to come back down to these fib levels before maybe we pushed up again. So even though I was originally looking for this buy here and I was in the trade, I just swapped my bias, and I just was able to take my mind out of the buy and just get ready for the sell. So that's what I did. Was it this trade here? No, this one. So what I did was I just set the order at the bottom of this correction and put my stop loss above and waited for it to break, and that's exactly what I did. Really nice trade, and I think now it is running maybe 5-6%, and I have 4% currently locked in, which is lovely, a lovely 4% trade. And I also caught another trade. Let me just close that. And I also caught another. Let me just make this one a little bit easier to see. And I also caught another trade down here, because as it come to the angle bit, when you get close to the bottoms of the patterns that I trade, there often is a little correction or a big correction before price starts to drop. So all I did was I put my rectangle on and I set the order below, but I actually gave myself a bigger stop loss this time, because I knew that it was very likely that price was going to continue down. However, I just didn't know how big this correction was going to be. So in order to give myself the highest probability of catching the trade, I just give myself a bigger stop loss. Otherwise, price could have just come up a little bit, done that, and then dropped, and I could have been taken out, or it could have done whatever. You can get a lot of wicks. So that's why I give myself a bigger stop loss just in case, meaning that I caught the trade and then it worked, it started to drop, and that one's at 3.64% profit, and I have nothing locked in at the minute. I just got a break even waiting for it to push down to 4. So they're the 2 trades I have on now. A lovely set of trades, to be fair. 3% from that first buy, 4% locked in from that one, and 3% running on the other one. But the key part of this trade was the fact that I was able to switch my bias even though I was in the buy, because when I first started, and a lot of traders, when they are in the buy, they only want to see signals for a buy. They will be completely oblivious to this or any other signals to them that show a sell. They don't care about that, because they're just interested in making that cashola and price moving up. They will not see anything else. And you really have to avoid that, because the market doesn't really care how you see it. It's just going to do what it's going to do, and it's your job to interpret the information on the charts as level-headed as you can. So there are those 2 trades that I took. What's the next trade? And the next we're going to go to is Aussie dollar. This is another really good trade. It's actually been a very good couple weeks for trading, to be honest with you. So this trade, another one quite similar to the last one, actually, in fact that I had to change my bias. So this one, again, on the daily, you can clearly see that price is pushing up. We've had this pullback, and then price is pushing up again. Now I've got my fib levels drawn in on here and here, so I'm looking for price to come to these levels before perhaps then price pushes up. Now if I drop down to the hour, now price did hit the daily fib levels and it did start to push up, and I could have actually gotten in a trade down here, because it would have pushed up, hit the fib levels and pushed up, and I probably would have just been a break even, but it is a trade that I still missed. However, when I started to see that price was starting to create this overall pattern here, I knew that there was another very high chance that price could come back down to these fib levels before price began to push up again. So when I saw it, and you had this 1, 2, 3 touches, what I was looking for was a impulse down like this and a pullback or a sideways correction to the fib levels. So I waited for price to pull back to the fib levels, which it did, and when I got some rejection, I set the order, and I gave myself a decent sized stop loss above the high, because again, I knew there was a very high chance that price was going to come down. I just didn't know where from. It could have double topped, it could have gone a bit higher and broke. I just gave myself enough protection so I had a high probability of catching the trade. So price was just pushed down, and at one point I didn't really think I was going to get in the trade. When it come down here and I saw this massive green candle, it was like, well, no, you've had enough winning trades for this week. That's enough for you, mate. But luckily, it just sort of carried on, pushed up again, and then now it started to drop. And I think it's probably running 5% maybe, 4 by the looks of it. Yeah, 4.5% it's running. So another good trade. I've got 3% locked in. Up here, 3% locked in, and I actually took another trade on this pair as well. If I show you there, oh no, not that one. Down here you can see one price actually come again to the break of the pattern. We had this clear 1, 2, 3 touch pattern, and price started to push down. And I actually took this one on the 15-minute chart, because with the smaller patterns, sometimes you won't see the rejection, and what happens is on the hour you just get this massive big candle, and by then it's just too late. So I just waited for the 1, 2, 3, and as soon as I saw the rejection, I just set the order, because with how I trade, I just tend to wait for rejection, and I just play the area, because I know that there's a very high probability that where I think price is going to go, it will. So instead of just trying to wait for perfection on the candles, I just play it, give myself a big enough stop loss so that I have a higher probability, and just let it play. And that's usually how it works for me. I don't like waiting for the perfect candle shape, you know, the evening stars, the morning stars, the doji, the hanging man, and all that, because you got to understand that how many other traders, the first thing they learn about are candles and everything like that. That's what everyone else is looking for, and you're not going to make money trading exactly the same as everyone else. So just for me, that's how I like to trade. But this trade actually was just a break even. It pushed down, to 2.37% and then just push back up. So that was a break even for me. But nevertheless, the trade I've got on now, still running, is a very good trade, and it could just come down to these areas like this before maybe it turns around, or it couldn't. It might just not turn around at all, and I could just get an even bigger trade. But we'll have to wait and see. So the next trade I have on is Euro AUD, and this is quite a simple one, and I think it's a break even actually. Yeah, this is a EURAUD. So EURAUD, really simple. I know I'm saying all of them are simple, but that's because for me the analysis is really simple, and after you watch a few videos you'll probably find all this analysis really easy as well. What's hard about trading is the mindset and actually taking the trades, but we'll get into that as well. But for this trade, easy. Price has just been pushing down, pull back, pushing down, pull back, and now we're just starting to get that bigger pullback before price maybe pushes down again. And here are the fib levels. So we dive down to the 1 hour. So on this chart here, price has hit the daily fib levels and it started to push down, but it wasn't really pushing down that clean. So I was waiting to see if I get quite a clear correction, and that's what I did, as I just got this 1, 2, 3 touch pattern. So I set the order after the rejection and price went down to 3%, but I didn't lock anything in and it just took me out for break even. Simple trade, not really much to it. However, I knew that there was a possibility this was going to come back up, because I thought that price could actually make a pattern like this where it could just break above this fib, hit this fib level, or just break above the daily fib level and hit there before pushing down. So I was fully aware of that, and I'll be looking for that trade maybe next week or the week after. But there is also a possibility that it comes back up to here, double tops off this and then drops. So all the trades that I'll be looking for. But that's that trade. The next trade I believe is Euro New Zealand, and it's very similar to that last trade, except for I managed to bank 3% profit on this one. So for this trade, so for this trade, we have this pattern here. So we've had price push down, pull back, price push down, pull back, and now price is pushing down, and it's created this sort of angle here. And this is just a large version of those angle breaks that I was talking about earlier. And in the 1 hour, as you can see, price come to the break area of that pattern and just created a 3 touch pattern to the fib levels as well from this area here. And when it came up to the fib level, so I just set the order on the rejection and it came down to 4% profit. So I locked in 3, so I managed to bank 3% profit on this pair, very similar to the last one, except from this one came down to 4% for me, which means that I lock in 3. So I managed to bank 3% profit, and now it's just shooting up. And remember when I said earlier that a lot of the angle breaks will actually break the double top before they, I said earlier that a lot of the angle breaks will actually break the previous double top before they actually commit and break, which is why I did actually think that there was a very good chance the price would come up to here first, break this double top, and then push down. So that's what I'll be looking for, again, probably next week or the week after. But that's on my radar. And now the next pair. Now the next pair, I believe this trade was actually a loss. Yes, it was. So on this pair, you can see we've got Aussie CAD, and we had this massive significant double bottom, and prices just come to this double bottom, and it started to actually pull back, and I saw this as a maybe people getting caught on the wrong side of the market, and it's starting to push up, give me a pullback and continue up this way. So what I actually did was that looks messy. Let me just come to here, because that does actually look very messy. Unlock it and show you there. That's cool. So I actually saw price push up like this, and then it started to come down to these fib levels, and then I saw a 1, 2, 3 touch pattern, and I wanted to actually take the trade there, but I missed that. But then price come back around, arced around, double bottomed, so I took the entry there and I just let it play out, and it just came up and then tagged me out eventually. At some point tagged me out there. So that's a trade. There's a 1% loss, but I'm not really that bothered. The one thing I may say about this trade is that it's quite a steep pattern, and usually when I get steeper patterns like this, I will actually wait for a correction before I looked to enter, so I should have actually waited, but I'm still happy with the trade, because if I take this trade another 6-7 times, I'll probably win 3 or 4 and I'd be in profit. So it's not really a big deal, and I'm not going to beat myself up over it. I think overall I'm still 14-15% up guaranteed, and I've still got trades running that could make me more, so I'm very happy with the last 2 weeks of trading. Now, 2 trades I'm actually looking at as well for possible entries are GBUSD and Aussie Kiwi, I believe. And they're because if I go to the daily, now on pound dollar, you can see that price has just been pushing up, correction, pushing up, correction, pushing up, correction. And I was looking to see if price could hit these fib levels from this point here to this point here before pushing up to this daily double top, before price either breaks or rejects and starts to push back down. And we've just impulsed off, and we've just pushed off the first daily fib level. So I was looking to see, as you can see, we've pushed off this, and I've got my fib level in here. And I was just looking to see if, I'm sorry for all the different colors in my fib levels on the boxes. Blue means a sell and green means a buy for me. I always change them because I always decide which one looks best. So yeah, sorry about that. One day I will decide on a set color. But yeah, so as you can see, price is impulsed up, and now we're looking for price to hit the fib level here before possibly retracing all the way back up to this point here. So we've just started to get this 1, 2, 3 touch pattern here on the fib level. So I'm possibly going to look for entries if we get a rejection, or similar to the other pair that I lost on. As you can see, this pattern is quite steep. So I do know that price can just trickle down and do keep going before it pushes up. So what I'm probably going to do is just wait for a push up, wait for a correction or a pullback, and then I'll look to take the entry. See if we can reach all the way up here. It'll probably be about 10-12%. And the next pair is Aussie Kiwi, as we've just hit a very significant double bottom, I believe. Yeah, we've just hit this double bottom here, and we've just had this massive impulse up. So we're just looking to see if we get a pullback to a fib level or a clear correction to take to the upside, and that's really it. So I hope you enjoyed this breakdown. That's actually my first this is actually my first time breaking down pairs over the cam. I'm recording it, so it's a little bit weird, but I hope you took something away from it, and I hope that helped, and I'm probably going to do it every week. And so yeah, I'll see you in the next video.